Picks me up.
All right, welcome to Momentum Monday. Today is Sunday, August 11th. Howard, Rachel, what's going on?
Yeah, we're in Toronto. We're delayed. You can see we're flying out of Porter Airport, downtown Toronto on the lake. Headed back to New York. We came to see family. And so we can't miss a show. So we're doing this from the airport. Hopefully everybody can hear us. Rachel's got a couple ideas she wants to share.
Awesome.
So let's get right to the markets. And you do the talking. I got to figure out how to go on mute so people can hear me. But keep going.
Yeah, I just need to share my screen and then we go. All right.
Great. You going to be okay there, Ivan?
Yes, I just shared my screen. Can you see my charts?
Yeah.
We can see your charts.
All right, this is a chart of the S&P 500. As we saw last week, we had a big gap down on Monday on the new tariff news and on escalation of the so-called trading war between the US and China. The S&P held deep buyer step up around 280 and we managed to have a little rally, which it seems to be stalling near the 50-day moving average. And the situation looks the same for the Nasdaq 100. A pretty significant breakdown on big volume and then a light volume snapback. And now we are back to important levels, as I said, near the 50-day, near the declining 20-day moving average. And until we manage to close above those levels, above the 20-day moving average, I think there's still a pretty good likelihood that we test that low here from last Monday, and I think the best case scenario for bulls pretty much is staying in a range for the next few weeks. Like, I would not be surprised if the S&P 500 stays between 300 and 280 for the foreseeable future. What do you think, Howard?
Well, let's go through some charts. I think the most important chart to me, Ivan, because it's been our leader for so long, is the IGV, the software index. So pull that up.
Well, if you look at the Momentum 50 list, you might think that we didn't really have a correction because many of those stocks are holding very well and quite a few of them gapped up on earnings.
Yeah, I'll go through some of them, Ivan, but if we look at IGV, which is, if you go back to a monthly here, we can see the uptrend this has been in. And it's slowing down finally. So, this is a blip. Last week was a blip, but it was a real blip. And, I think that's the sector that matters to me. We fell, almost 10% pretty quickly.
Well, Howard,
And
IGV looks exactly like, the chart of IGV looks exactly like the Nasdaq 100 and the S&P 500, which is what happens during corrections. Like correlations rise and all charts look the same regardless of individual.
All right, well, I think let's look at what worked last week. Shopify. So if we look at what the leadership is, assuming that we're in the middle of a correction, and as we've been talking about, August and September are generally, over the last 20, 30 years, the weak months, back to school months. People are moody. Let's talk about what's working, and that would still be Shopify. So I've talked about it before. Rachel built the Shopify store for Rally Road this summer. So we're talking about a company that is now almost 40 billion. When we started talking about this company, it was under 10. So we're making coffee here at the airport. It was under 10 billion. And how easy was it to use Shopify, Rach?
It's pretty easy. There's two different apps that you download. Basically, there's the POS system, so it's the back end, and then there's the front end where you design the store. So designing the store was really easy.
One person, you did it by yourself?
Yeah, I did it by myself. Took a day and a half. And then the POS system, I set up with the head of the retail store at Raleigh Road. So it took in total like 2 days.
So for, Ivan, if we look at a monthly, I've been holding the stock. I haven't added any for over a year, but we can see this stock continues to lead out of the software e-commerce side. The Trade Desk is another one, Ivan, that continues to work. So you can see, like, even though we're in a correction mode, a lot of stocks continue to grind higher. So I don't, I just don't think you need to be aggressive here in this market. But at the same time, Ivan, I think the panic is very high. I don't know if you can walk through some of the readings you have, but like the spike in T-bonds was kind of epic. People panicked into bonds. So I feel like, I hate paying up at crazy prices. I hate being told what to do, which is don't fight the Fed. Because I'm older. I mean, you're a younger person, but so you can give us your thoughts there. But I don't like buying stocks because at my age, because the Fed is in my corner. I like to buy stocks that are breaking out and have catalysts. And I think a lot of the stocks that I've loved for a long time here, and they're getting boring to talk about. Let's take a look at the restaurants, Ivan. They continue to work. McDonald's. It's not just software. McDonald's hit all-time highs. I kind of sold a little couple weeks ago when it didn't take out new highs on the great earnings numbers, and boom, in a shitty week, McDonald's, if you go to the daily, just took out all-time highs.
Well, I think in a low interest rate environment, it's normal to see some flight to safety, and McDonald's usually tends to do well during recession since it's a very cheap restaurant. So it attracts,
not just cheap though. It's a tech company at this point. The food is technology, the menu's technology, the service is being replaced by technology. That basically that 3 menu, breakfast, lunch, and dinner. So it's become basically a food technology company. Elsewhere, other industries, solar had we talked about solar.
Yeah, some of the solar stocks continue to surprise. I mean, the whole solar sector and the solar ETF, it's still the best performing non-leveraged ETF for this year, which is very surprising. Look at this breakout in SEDG, which is
we talked about it. I was all over this and I didn't pull the trigger.
Yeah, it is on the definitely last week we were very lucky on the Momentum 50 list. We had 6 or 7 big reports and all of them were gap ups. So we've done a really good job picking the right stocks. And also
Q2 was another one in banking, middleware, software. Damn, I just been following it a while, didn't pull the trigger in this environment. Also, kind of a fake breakdown, and then boom, just exploded. I think this stock is going to go much higher. I've been trying to do some. What's that one that? Yeah,
that's just another stock from the list. I'm just showing all the earnings breakouts from the list from last week.
Walk people through how they can sign up for Market Wisdom, Ivan.
Well, just go to marketwisdom.com. Just the homepage. You have 2 options. You can sign up for monthly or annual. The monthly is $99. The annual you have a 20% discount. And you get swing trade ideas from me, daily market analysis, risk management, position sizing, education. You have a model portfolio run by Howard, and he also shares his analysis on a kind of weekly basis. And of course, you also get the Momentum 50 list, which is absolutely crushing the market averages this year, and especially last week.
Ivan, just go back to the list. I just want to check out a couple of ideas. I think we've got the number wrong on Shopify for followers. Yeah, for some reason it's pulling from the API the wrong number. I think one of the things I look for for the members is number of stocks which follows. I think this Avalara for software. You know, the fact that it has 1,000 followers on stocks.
Oh yeah,
I
this
like
is wrong. Yeah. I need to. I think
Yeah,
those are.
Shopify is broken. But
Yeah.
if you look at Q2, some of the stocks that I try and pop to me are the ones that are breaking out that have high price momentum and a few followers. So Q2 is one of them. You know, it hasn't been discovered, even though StockTwits is kind of ahead of the curve with its people that are following momentum. So that one really had popped out to me, and then sure enough, it broke out. And then AYX has been at the top of the list for a while. Again, very few followers. Everybody's in the application software. It's been 39 weeks on the list. And so again, you don't need us to hold your hand. You know, this list of how we built it and all the data that we pulled in is really kind of does its work for you. Obviously, you've got to build your own risk reward management, but any great stock shows up on our list, and you know, 10 minutes a week kind of gives you a feel for what sectors are working. So AYX, Q2, SEDG.
Yeah, we have this one, the accounting company Avalara, also big
What's the
breakout.
monthly look like, Ivan, on that?
It's a relatively recent IPO, so this is a weekly.
That was a great breakout at 60, and now it's having another earnings breakout. So then, still losing money, but wow. I've never seen the software used in the wild, obviously, because I'm.
Oh, also Mercado Libre, they also had a
huge
Yeah,
breakout. This is the leading Latin American stock. It's on my list, but I own PAGS, Ivan, and STNE is kind of breaking up. The three of them.
Both of them report earnings next week, so it will be really interesting.
Who reports earnings?
PagSeguro and Stone, the two Brazilian payment processing
Yeah, they're going to be
companies.
good numbers. It's just a question of margins and what they, you know, Stone blew up on the last report or two reports ago because of margin compression. I think the growth is going to be staggering for both companies. Did Mercado report earnings? Is that why it gapped up?
Oh yeah, that's why.
So all in all this week, Ivan, I think, you know, there's a lot of panic.
Wow, look at this acceleration in sales growth, 63% quarter over quarter. Earnings are also.
Look at those numbers. Yeah. I mean, this company, you know, again, I mentioned about a month ago at around 600 that we got the breakout you want. People like hate buying $700 stocks. And I say in a world where you can buy 10 shares or 20 shares, millennials and young people need to learn that these stocks aren't going to split anymore. This is not going to do a 10-for-1 split. Mercado Libre does not care. They're all following the Berkshire model. They don't care if you own their stock. They don't want retail traders. So get in the habit of like using fractional amounts of shares. It's all about dollar amounts, not about how many shares you own. So, even if it's $700 in one share, you know, if the stock runs 30%, that's 30%. I see so many people try and buy $1 and $2 and $5 stocks. Get out of that habit and, you know, use our list in the all-time high list, and you'll find that there's no $1 stocks hitting all-time highs. It's all $20 to $500 stocks. Okay, Ivan, anything else stood out from last week?
Yeah, another big breakout. WK, they cleared new all-time highs. Another enterprise software name, and also HUBS, also an earnings breakout, near all-time highs. As I said, if you just judge the market health by the Momentum 50 list, you will think that we're in a great shape, but
we are. I mean, even in, again, I'm not saying you got to rush in here, but I do think.
But there is some damage under the surface. I mean, if you take a look at,
it's very thin. But even in financials, right? CME all-time highs.
Yeah, some of them. But look at all the brokers. Like there is.
The brokers that can't make any money.
Yes, all of them are like near multi-year lows.
Margin compression. This is asset under management is a broken model. That's what we're seeing here. TD trades, the statistics that made E-Trade, just a good point, Ivan, that made E-Trade Schwab. The reason Robinhood has an $8 billion valuation and E-Trade now has what is E-Trade's value?
10 billion.
Right. So people will joke and say, well, E-Trade's doing blah, blah, blah in sales. Who cares if their sales are good, if their margins are worthless, right? And the point is, Robinhood's charging based on a subscription business and has 1/100th the amount of employees. It's not about how much assets you have under management. And I think we're really seeing this is a good point. We're really seeing this now happen in the brokerages. You know, they didn't get involved in the new markets. They didn't cut their costs fast enough. They're still spending money on TV ads. And you know what? The millennials, like my daughter, have a Coinbase account. They have a Robinhood account. They're going to have a StockTwits Trade app account. And they're going to be buying individual stocks for free. And they're going to be closing their parents' brokerages accounts, and you are starting to see this. So this is a real bear market for certain financial stocks. But if we look at the other side, like Q2, which we talked about earlier, CME, all-time highs, the NASDAQ, which is a perennial underperformer, which I own as a proxy on the NASDAQ and on data. Unfortunately, it's kind of been a laggard, but still holding. You know, it has a lot of false breakouts, but I like that one too. What else do I like? If we look at the biotechs, and even though it's been kind of a mixed bag, if you look at Amgen, a big on an Enbrel announcement on Friday. We look at ZTS, which is in the pet space. I think it closed at all-time highs. Yeah. So, and then Tandem, TNDM, which is a diabetes stock.
This one is stuck between 60 and 70. It's been there forever. But, and another one that I think people should.
Considering where it came from, considering where Tandem came from, if you look at if you look at a monthly of Tandem.
Absolutely. Let's look it up. Look at it.
Okay, doing pretty well considering
Yes.
the rally that it had. I mean, this is a great digestion. The fact that it can hold here, and it's actually went from losing $20 a share to like almost break even. So,
Exactly.
And diabetes is the trend here. So even though this has come from $4. I like the price action here.
Yeah, I was going to share one biotech idea. I mean, Unicure, it's in a downtrend, but I think, and it's very likely to test that gap here near 50 and near its 200-day moving average. I think that if there is some bounce here, that will be a buying opportunity for a swing,
I've stock a while.
for a 20% swing.
A lot of people that I know who trade biotechs are long this. Another one that I think is interesting are the genomic stocks. They were starting to break out, and this correction hit them pretty hard. But they bounced and held pretty well Friday. So this is my favorite in the sector, and the one that I'm looking to add a few shares. It seems to me the ones where the software and tech people are talking about this sector the most, the genomic space. So it's the only one that kind of excites me because there's more software, leaner companies and more software involved. Okay, anything else, Ivan, from other industries? I'm just taking a quick look. I think the IPOs, Ivan, are interesting and that they were blowing up. Farfetch.
Oh yeah, absolutely. The online retailers were absolutely crushed last week. Look at that.
Oh, yeah. If we look at Farfetch, they bought a streetwear company. I mean, you were looking at the stock, right?
Yes,
as a breakout potential.
Exactly, but didn't happen. This is another one.
And Revolve, Rachel uses this is for Gen Z. So again, these are ones you want to put on your list for when they get their act together and kind of regroup here as public companies. These will be forgotten companies, and if they really are meant to be, when these companies get back in uptrends, I think you're going to want to remember them, Revolve and Farfetch. But for now, broken.
Okay.
Same with Stitch Fix.
Exactly. And then let's do one more topic to close. What do you think about China here? Just leave it alone, or are you nibbling?
I think, like I said, Tencent is one that I'll continue. I think the hard part is I don't use the products, obviously. I've only been to China once. and I don't trust, if you're patient, and they haven't proven that, Tencent, other than acquisitions, they haven't been able to break into American markets, and under this regime, it's never going to happen. So technically, they look terrible. I don't see why. We're momentum guys, Ivan, so I don't see why. Part of my 8 to 80 portfolio, yes, but at the same time, I don't see why if you only can own a certain amount of stocks. I don't understand the catalyst to make room in your portfolio for Chinese stocks right now.
Yeah, I think the most interesting Chinese stock right now is Luckin Coffee.
Yeah, and again, just like America, it makes sense. I mean, the valuations are crazy, but it's. I just don't see why an investor needs to add these to their portfolio. I don't know if you like Luckin, you should like Starbucks. Charts look the same.
Absolutely. I mean, one of the main reasons Starbucks is doing so well is exactly China, because Starbucks is opening 600 stores a year in China right now. I
don't get it. I think China works in a bull market. I think if you're going to try and trade the news and get lucky, listen, I think so. But there's enough stocks that are doing well that unless you have cash burning a hole in your pocket and you like buying, like I said, my 8 to 80 list, Tencent kind of stands out to me, but there's a lot of headline risk continuing around this
Are you bullish on gold, or you don't care?
I think it's interesting, right? Like, I think it's getting talked about so much, and generally I prefer it not being talked about so much. I think it's more bullish for the market that everybody's talking about gold than for gold itself. Heavily watched things tend to not move. Bitcoin, no one gives it credit, and that's the one that's moved, 100%, 200% this year versus gold. So I don't know. Again, like I said, if you're conservative and want to play a commodity, I guess gold is something that could be interesting, but for me, it's too heavily watched, and I like this long loose base in gold over the last 2 years. I mean, in Bitcoin, sorry. But anyways, gold from a technical perspective looks fantastic, but it doesn't make any sense to me. So I'm going to pass on that. And have a good week, Ivan. Hopefully this helps people. Let's get it out on.
Yes. All right. You too, Howard. Have a good flight.